Rob, this methodology of threatening tariffs and then imposing them, will that help affect change in China and their policies towards foreign companies?
I think it's an essential first step. China has been taking advantage of the United States for far too long. They've engaged in massive subsidies, built up tremendous amounts of overcapacity in many industries, and this has allowed them to dominate world trade, costing us millions of jobs, most of them good jobs in manufacturing. You said this is the first step. Tell me how you game this out then. Well, I think the thing we really need to do is come up with some systemic solutions to our global trade imbalances. It's not just a problem we have with China. Other countries are gaming a system like Japan, Korea, and even the European Union. All of them have maintained large global imbalances. The best way to solve that is by realigning currencies. This is something that was done last in 1985 in the Reagan administration, before that by President Nixon. But most currencies float now, right? I mean, it would just be China that would be doing that.
No, but aren't you critical of China for manipulating its currencies and weakening
That's right.
it?
And what we need to do
so isn't that what you're proposing the United States do, to weaken its currency?
No, we need to have an agreement to realign the currencies. This is what has been done before. 1985, we had floating currencies as well, but those trade imbalances were threatening to destabilize the world system. And so we responded in that way. What first happened was we threatened to impose tariffs, and then we finally got to negotiations to realign the currencies.
John, what do you think? A first step to get to the ultimate goal that the United States has? I mean, does this means justify that potential end?
You know my view. I think a lot of this China, this bad guy, is tribal chest thumping. It's they, it's them. We're good, they're bad. That's a bunch of baloney. There are issues in China, many issues. I spent a long time being there and studying them. And I would like them to open all their markets. I would like intellectual property to be totally protected everywhere in the world and the like. But trade is more complicated than just talking about trade in goods. You know, China this year, their current account deficit is 0% of GDP. China does not have a trade surplus, including goods and services. They're about in balance. So these individual country trade balances are they don't mean what you think they mean. Look, if China did everything you wanted them to do, and we had no tariffs either, the trade account would not be in balance anyway, because when you buy dollars, you buy them either to buy goods on a ship in a container, or to buy a service that comes across the internet probably, or to buy a security. Those securities are treasury bonds, and the treasury bonds they own are invested in the U.S. If the president gets what he wants, U.S. and foreign companies bringing assets back into the U.S. to make jobs, they have to buy U.S. securities to do that. The currency market has to be in balance every day. That itself will force the trade deficit further into deficit for the U.S. So we need somebody to slow down, stop talking about good versus evil and us versus foreigners, and actually look at the numbers and solve this in a more sensible way.
Rob, John doesn't dispute what you think the issues are and what a lot of people agree the issues are, but it's the methodology. Once again, we have a lot of economists who come on and say that, in fact, trade deficit is just going to get worse as the U.S. economy gets stronger.
Well, that is, in fact, a problem. Despite all the actions that President Trump has taken to date, the trade deficit has, in fact, gotten bigger. It's increased by 10% this year alone. It's gone up, particularly with China. So this is why we need to step back and take a systemic approach, which is going to end up realigning the dollar if we're going to be effective about rebalancing the trade.
I'm trying to imagine this world. I'm sorry to interrupt you.
I'm raising the U.S. price level.
I'm trying to understand the methodology you're talking about here. I mean, are you going back to the whole Plaza Accord era? Everybody gets in the room and they decide kind of where the currencies are going to, and everybody locks them in a range. I mean, I don't understand how, if in a world of free-floating currencies, we achieve that alignment you're talking about, Rob.
Well, that's the simplest model, is to go back to the Plaza Accord model. What happened there was we threatened to impose tariffs, and then we brought countries together, and they actively intervened together to cause currencies to realign. There are several other ways to do it now. The United States could actually buy foreign currencies, just as China and other countries have done to suppress the value of their currencies. We could drive the value of the dollar down that way by investing in bonds issued by the Chinese government and other countries. So that would work. We could also tax capital inflows, as proposed by the economist John Hanson. So all of those things can work to move foreign exchange markets if we can agree on where we should go.
John, you get the last word. I heard you say that was nonsense.
Those are cheap dollar policies. We've seen them before. Cheap dollar, fixed exchange rates, forced exchange rates to change. That's nonsense. Look,
well, it worked very well in 1985.
If you want to do something about the currency market, the first thing you have to address is that people in China are not allowed to own foreign assets. It's not a convertible currency, so the idea that you can figure out some floating exchange rate is nonsense. That's where we need to press them, is to allow their people to own foreign assets. Secondarily, they have an antiquated banking system, which means most people in China pay for things with 100 RMB notes, not with bank cards or things like that. That means they need more reserves. They get reserves by buying treasuries because they don't have an effective bond market. But the idea that you can manipulate the currency market and somehow get a result that you like is an old idea, tried before. It's a terrible idea.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.